Well, guys, the results are in. Nvidia just reported earnings. The stock was up as much as 4% and also down as much as 3%. Very volatile price action for the biggest stock in the world. And today we're going to be talking about all things Nvidia. Did they beat or did they miss? What did data center revenue print? And more importantly, what did the company say about guidance and Blackwell? We're going to be discussing the implications of this on the market and what Nvidia's earnings means for the movement in the S&P 500 as well as the Nasdaq 100. Is this a signal to get long or to get out? We're going to talk about it. We're also going to talk about Trump's latest tariff plans, who's next on the chopping block, and of course the budget bill that just passed the House. Trump is cutting taxes on tips, overtime, and Social Security, and this is just step one of Trump's latest tax overhaul. We need to talk about what this means for earnings and the economy as well. So let's drown out all the noise and get to the facts. We've got a lot to talk about. Let's roll the tape. Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks closed mixed to end another volatile trading session after President Trump spoke about his tariff plans at a cabinet meeting on Wednesday afternoon, as the market also braced for Nvidia's earnings. Now, Nvidia up 3.67% on the day in anticipation of its earnings. We're going to talk about whether they beat or missed, so stay tuned. Microsoft up 0.46%, Meta and Oracle. So we did see a little bit of a mega cap comeback. However, it was only in like these four names, AVGO as well. Eli Lilly was up 1.46%, and then Amazon right here up 0.73%. We did see a couple of big losers, Visa, MasterCard, Costco, right, Walmart, they all fell. Tesla was down another 4% after being down 8% yesterday. Google fell 1.4%. Apple fell nearly 3%. And this led the market to be very, very mixed. There were a couple of bright spots though, like I mentioned before, and we just saw mixed price action across the board. However, this is a better view of the market. You could see that technology was clearly at the top regardless of what Google and Apple did, up 1% here for the XLK. XLU utilities, so this is sort of like semiconductor AI adjacent. It's not necessarily like a utility or a defensive trade. It is, but not in the environment right now. Utilities are more of a like an adjacent play to AI, to tech. So we saw these two sectors up the most today. They were actually the worst performing sectors in the last week. Gold was up 0.16%, and that mostly had to do with Trump's tariff situation. We're going to talk about that later on in the video, guys. And then industrials was up 0.05%. So there were only three sectors that gained today. The S&P 500 was flat, and then most of the other sectors actually fell. And we saw the two defensive sectors that really outperformed in the last week, staples and healthcare. They were both down 2% and 0.76% respectively. So even though we did see a heavy pullback and heavy outflows in the market from the highs on the back of Trump's tariff news and an uptick in gold prices, we didn't see that defensive rotation we've been seeing. In fact, staples got absolutely hammered today. Same with healthcare, same with the real estate. Then we saw energy, discretionary financials, and staples. They were all down about 0.5% to 0.2%. In fact, I would just say that what we really saw today was a very balanced day of trade, especially if you exclude the technology sector and the staple sector. Net, the S&P 500 was flat. And if you actually look at it on the factor segment chart, large cap growth outperformed today, up 1.52%. Mid cap growth, small cap growth as well. This chart was literally the opposite yesterday. Growth was in the red, value and core or value and blend was in the green. That has turned tables. So again, we are starting to see another rotation form in the market with a large cap value that's mostly like staples, healthcare segments in this name down 0.76%. But really it was a time for growth, particularly large cap growth. Now, the reason why we actually saw quite the crazy trade today with large cap growth completely outperforming the value segment, and also a huge pullback from the highs, particularly from the S&P 500 and the tech space, had to do with an announcement with regards to tariffs from Donald Trump. Donald Trump came out and said the EU was formed to, I quote, screw the US over, and he promised tariffs on automakers as well as other goods. Those tariffs would amount to 25% is what he's pitching right now. We'll see if that number comes to fruition. He said it would be announced soon, and he said the levies would be applied generally and specifically. He mentioned car imports, but they will also be applied to other goods. So Europe now in the firing line. We have Canada and Mexico, China too, and that's most of the developed world that the US will be imposing tariffs on. Very, very interesting. The market definitely didn't like this news because the S&P 500 at one point was up 1%, and then we traded flat at one point, slightly negative for the day. So it really goes to show that Donald Trump really is moving the market, specifically with tariffs. And because tariffs represent uncertainty, what does the market do in the face of uncertainty? They sell, they get out. However, we didn't see that defensive positioning in the market. What we really saw was just sort of like a move to sort of the growth defensive parts of the market, those companies that can withstand tariffs. Names like Meta, Microsoft, or Netflix. Now, we also had some market-moving economic data. We had a couple of Fed speakers, Barkanier and Bostic, did come out and, again, saying the exact same thing. They're in the wait and see mode with regards to economic data. Now, we also got new home sales data, and things are not looking good here. Now, month-over-month figures came in exactly as expected, or slightly below expectations, I should say, but we did get some up revisions to the previous number. Remember, when you see green, revisions were positive. When you see red, revisions were negative. And then we saw 0.68%. That was the consensus. So we did miss consensus ever so slightly. But again, the revisions did help a little bit. However, the month-over-month sales, negative 10.5% versus the forecast of negative 2.6%. So this was very, so the month-over-month figures not looking too good, but the year figures all right. But yeah, this is not looking good. Like 7% mortgage rates really having a sting and really impacting the housing market. And I think this is part of the reason why the Fed are going to cut, because 7% mortgage rates are not accretive for the economy to expand. Do you want to see that residential fixed investment part of the market open up with lower rates, and that can drive growth next year? That's part of my thesis for higher than expected GDP along with rent deflation. We'll see if it comes to par, but yeah, the housing data right now, particularly pending home sales, new home sales, and a couple of the other bigger data points not looking good for the real estate market in aggregate. Now let's actually talk about market movers, and the biggest one was Nvidia. This was very volatile, up about 4% on the day. At one point, the stock was up nearly 4% in its earnings. It was down as much as 2% as well. Very, very volatile. And as of right now, Nvidia is actually trading kind of flatline. So the market didn't love the earnings. They didn't hate the earnings. And what we actually got was a double beat. Nvidia reported an EPS of 0.89%. The market was expecting 0.84%. So that's a huge beat. Now, the big beat came in revenue. The market was expecting 38 billion in revenue. Nvidia reported 39.3 billion in revenue. That's actually a very, very big beat with the revenue side. Data center revenue also beat expectations of 34 billion, reporting 35.6 billion in the quarter. And the company also guided for Q1 revenue of 43 billion plus or minus 2%. Now, a big news that's also something that's going to move the stock is the conference call. Now, I may actually have a separate YouTube channel that I'm going to create where I'm going to talk about Nvidia's earnings and just single stocks. So if you guys want to see when I release that, it's going to be sometime today or tomorrow. Go ahead, follow me on Twitter because I'm going to drop the link there. It's going to be called FinFluential Media, guys. And we're just going to tackle single stocks on their earnings and talk about them in depth every single day instead of this broad market analysis. So if that is something you like, if that is something you want, leave a comment and you'll be the first to know. Sometime today or tomorrow, I'm going to drop that YouTube channel, guys. Now, CRM, Salesforce also reported earnings. It kind of was overshadowed by Nvidia, down 4% on the day, and that's after a 4% drop here in the after hours. And Salesforce earnings was not good. I briefly skimmed over it, and we saw sales revenue came in at about 10 billion. That was what the market was expecting. However, EPS came in at 2.55, right? They actually missed EPS. The market was expecting $2.61. CRPO, a KPI they tracked, came in at 30.2 billion. That's up 9% year over year. And then Q1 guidance was a bit of a stinker. Now, the Salesforce guided for 9.7 billion for Q1. The market was expecting 9.9 billion, and that's why we saw this move right here. They also missed on the EPS guide by 4 cents as well. Very, very ugly earnings for Salesforce. So it really goes to show that we are seeing slowing growth in this name and the market repricing it accordingly. I think my fair value for Salesforce was something around 240. So I wouldn't be surprised if we end up trading to that in the end of the quarter. But we'll see what Mark Benioff and his team has to say about these earnings with regards to why they missed on both the earnings and the guidance side. Lowe's reported earnings today as well. They were up 1.2%. This was before the bell. Very good earnings. They beat on top line, beat on bottom line, and really helped the discretionary space move forward. Not really much to say on this. And then NRG Energy posted stellar earnings. I believe margins expanded. They beat on top line, beat on bottom line, had some very positive stuff to say with regards to energy power consumption and the AI trade. This is an AI adjacent name. And that's why we saw utilities up as the second best performing sector. It also had to do with NRG and the commentary surrounding them. They were up 10% for the day. Very, very solid stuff. This was actually a utility name I was thinking of getting on board in the midpoint of last year. Unfortunately, I missed this name, but such is life, such goes the market. And then putting it all together, guys, we actually did see positive breadth regardless of what the market did today. 3,200 advances, 2,900 decliners. We definitely saw inflows in total in the market. However, we did see outflows net from about the midpoint of the day in the NASDAQ, and then the NYSE did actually see inflows on the back of great breadth divergence, as you can see right there. For all intents and purposes, the S&P 500 was flat on the day, and then market momentum continued to remain a little bit sour. We did see some of these names deteriorate from yesterday's close and significantly below last week's numbers here, where we were all in the green. But shorter term, medium term, and longer term averages not looking good right now. I really want to see us maybe take the 5-day, retake the 20-day, and then maybe even retake some of the 200-day moving averages. But the market momentum not looking that good right now, looking very sour. But let's hop on the charts. Okay, so this is Nvidia's chart right here. This is the 1-year chart of Nvidia. So you could see absolutely crazy. The stock went from $45 in November 2023 to $130. And if we actually pull up what the stock is doing, you can see we're up 2% here in the post-market. So it's been a very, very volatile pre-market. When I was recording the video, the stock was actually down 1% in the pre-market. We're now actually up nearly 2%. So it really goes to show the crazy momentum we've seen here in Nvidia stock. If we actually look at CRM as well, they actually did claw back some of the losses, down 1% for Salesforce. There were a couple of other names. If we actually have a look at Snowflake, up 11%. Absolutely huge move. Is the earnings reported right here? Yes, Wednesday. So they actually beat on the earnings side. They beat on revenue. So that was a double beat. And that was actually a very big beat on earnings. They nearly doubled earnings. Have a look right here, guys. So the estimate was for 0.17%. Snowflake reported 0.3% in earnings and a slight beat here in revenue as well. Absolutely insane. Year to date, how is the stock doing? Let's actually look at the percentage return. Up 5.8% so far for the year, but I'm assuming you're probably going to be up 15%. If we actually go ahead and add pre-post market price, yeah, so you'd be up 17% on this name in the post market after that huge move. What other stocks reported earnings here after the bell? So C3 AI reported earnings. Let's have a look at what they're doing. So down 2.61% in the pre-market, down 24% year to date. What are they actually trading at? $25 per share. And then we also had Marathon Digital. This is a Bitcoin mining company. You can see down negative 28% for the year, but you clawed some of that back in the after hours. But guys, mostly today it was really just the Nvidia show, and the stock just actually keeps rising. We're nearly at the $134 mark. And again, year to date for Nvidia, nearly at the zero line after this earnings move. So we could definitely see this is probably going to support the stock to go higher into Q2, Q3, guys. The second half of this year is going to be loaded as we start to see Blackwell revenue. So to see this company report a double beat and raise is probably going to support the stock and support the market. If you're a bull, this is exactly what you wanted to see, but we still have to see what management has to say on the conference call for the most part. Nonetheless, had you been in the stock over the last year, you'd be up 64%. Now, with Nvidia's earnings, guys, you could see that we are seeing some upbeat price action in the S&P 500 as well as the Qs in the after hours, the RSP and the IWM also getting a lift as well. The S&P 500 was flat for the day. The Nasdaq 100 up 0.22% for the day, 0.7% in total. When you look at it, profitable small caps fell, mid caps is up 0.16% for the day, and then growth outperformed value, but both positive in extended market hours. We actually saw yields continue to move lower despite Donald Trump's tariff announcements, and then the dollar actually rose. So again, a lot of market dynamics at play, and we spoke about this in yesterday's video. We're looking at the government spending cuts, what Doge is doing, right, and Trump's tariffs announcement, and there's an interplay with regards to the yields market. And right now we're actually seeing yields fall. The 10-year yield has literally gone from 4.8% at its peak. When was this? Middle of January, to 4.2%. Now remember guys, we said this 4.1% mark. This is where we're going to find strong resistance and or support if we break above or below. But this is where equities look really, really attractive. I work for an accounting firm and we adjust our DCF cost of capital at this level right here, the 4.1% for the 10-year yield for US equity. So this is a very, very key level. A lot of institutions looking at this 4.152% level. Take it to the bank. Now, the dollar was actually up 0.2%. We're still seeing a little bit of bullish price action, and that's to be expected. However, we are very clearly in a downtrend. We've broken this key 107 level where we used it as resistance right here, as support for this move up. Now, what you want to see with the dollar, guys, is a move up right here, use it as resistance, and then continue the move lower. That would be a trend continuation. Now, looking at AGG and TLT, they gained on the back of yields falling, to be expected, and then gold was kind of flat today, up 0.05%. And again, what we're really looking for gold is a pullback into this area right here, the 2800 area. I believe this is where Scott Bessent is going to revalue gold assets. This will probably be the gold floor in perpetuity. And I think if we actually do get a move to this 2700, 2800 area, we want to be huge gold buyers, because there's a lot that I believe the Treasury is going to do with regards to the US assets they own, revaluing them, and then looking at a repurchase agreement to add anywhere from 800 billion to as much. I've seen numbers floated as much as $1.2 trillion in US assets for the government and the Treasury to use. Very, very interesting stuff. Now, let's actually talk about the S&P 500, what we saw today. So regardless of everything, the positive price action in Nvidia, there's a couple of things that's going to mean a lot tomorrow. Now, we get some very high impact data. So the high impact data points we get tomorrow is initial jobless claims. We get the second quarter GDP revisions as well as durable goods. All three of those prints need to come in line, particularly GDP and durable goods, and this market can actually make the next move higher. We did actually see some price action in positive gamma. However, the bears came in a very big way after the tariff announcement, and we continue to trade sideways. So I continue to be a buyer. I continue to turn incrementally bullish at this level, this 5,900 level. And I think we want to be buyers if we do get here tomorrow for us to go ahead, retake the gamma flip and go from there. Otherwise, you want to be buyers at these levels right here to retake the gamma flip and then go from there. Nvidia reported earnings. The market is telling you that Nvidia earnings is actually going to be good. Let's actually just put it on the chart here so we can see what they're doing. Yes, up 3% today, 2.49% in extended hours. Pretty good move there. Pretty good earnings, a double beat and raise. So Nvidia is going to be a tailwind for the market, but the economic data tomorrow is also going to be important. Guys, if we get better than expected economic data tomorrow, we are going to close above the gamma flip, and then we're actually going to go ahead and aim for the 6,100 area. So a lot is going to be dependent on the gamma flip. Nvidia earnings is behind us. The market is telling you, I like the earnings. We're up 2.7% in the extended hours, and this is our signal to get long. What we really want to see here right now, guys, is we want to retake the gamma flip. That's the 5980 level. We retake this gamma flip, use it as support, then we can make our next move, target the 6150 area, and maybe even get a move up in the gamma flip, the core resistance, and the put support as well. The Nasdaq 100 looking very, very solid. You can see these gamma flip zones are just so key. We came right on here. Now, we didn't actually get into positive gamma. Now, we did use the gamma flip as resistance. That is a bit concerning, all things considered. Nonetheless, Nvidia's earnings is going to be a tailwind for the entire market tomorrow, today, for the rest of the week. Coupled with great earnings data tomorrow, we want to, again, retake the gamma flip and then aim for the core resistance. Nothing too crazy there. Now, the RTY was actually up 0.1% today. Is that right? Let's look at the IWM. Yes, it was. And we continue to form a base here at the put support. So very, very simply, we want to be buyers of dips right here, look to retake the gamma flip, and then we want to aim to go and take out this heavy volume area right here. You can see this is where a ton of shorts are positioned, guys. If we go ahead, break above this area right here, we are going to see a short squeeze, and that's going to take us to the upside. Very, very strong, guys. Bears have come in a very big way. If we get to this area right here, I think we're going to see a lot of short coverings, and then the IWM can do something like this and make the next move higher. The IWM tends to have very violent moves like this to the upside, so don't discount the fact that, if we get good economic data, we see violent moves. Also, not to be mistaken, something else that I didn't cover, I will cover in the macro portion of this video, is that we did actually see the budget bill pass the House. It's going to go to the Senate, and that is ending taxes on tips, overtime, and Social Security. That's probably the start of the Trump tax cuts. If we do get those, we'll see if this budget bill goes ahead and passes the Senate. Nonetheless, guys, I'm bullish. You want to be buying the put support at these levels right here for the NASDAQ 100, the S&P 500, and you want to see us retake the gamma flip. We can go ahead and do that onward and upward, and then we will target the core resistance. Nvidia's earnings was great for the market, and this is actually what we said yesterday. I became incrementally bullish at these levels right here. Consumer sentiment was telling us that it's probably time to get bullish, and it does look like we are starting to form a bottom. Good Nvidia earnings. If we get good data tomorrow, that bottom is likely solidified, and then we go onward and upward, and then we look to Friday's PCE data. But for all intents and purposes, guys, everything looks good for us to continue the move upward here in equities, barring any major economic shifts like Trump tariffs or anything in between. Nonetheless, buy the dip. I like everything I'm seeing, particularly in equities. We very likely go higher from here.
And let's talk about sentiment, guys. We are officially in the extreme fear zone. So I want you guys to know something. Whenever we get into extreme fear or extreme greed, we don't actually stay here for a very long time. And by a very long time, I mean we don't have prolonged periods of months and months where we actually hit the extreme fear territory. We sort of get into the zone right here. We may trade around a little bit, but then we begin to move into fear, into neutral territory. For all intensive purposes, guys, when you look at this indicator and what's to come next, the most likely outcome is that we probably do go higher, not without some volatility, but normally when we do get into the extreme fear zone, that is the signal for you to start deploying capital and start buying the dip. And generally speaking, guys, every 5 and 15% pullback, I always say these are the levels where you want to add a significant portion. The S&P 500 and NASDAQ 100 are very close to a 5% correction right now. This is definitely the place where you want to start adding. And if we go lower, you keep adding there. But from what we're seeing right here, right now, this is the time and place where you want to be adding exposure and putting some capital to work. Because when we do look at S&P 500 index seasonality, what we normally see here is in the month of February, we actually normally see quite a bit of a pullback, and that could lead into weakness here into early March. However, what we want to start looking for right now, guys, is an opportunity for us to go ahead, buy the dip, because what normally comes in the S&P 500 from March onward is actually very bullish price momentum, especially in the first year of a presidential cycle. It's very much the same. We actually get very negative returns in the S&P 500 in February. We normally put a bottom in here in March, and then we see the April, May, June periods in a presidential cycle and the typical S&P 500 cycle, very bullish momentum from middle of March onward. And the most bullish aspect of the most recent pullback we're experiencing in the market right now is that we've actually seen about a 50 basis point drop in yields. Historically, post GFC, so from about 2009 to 2021, this was the golden era of dip buying opportunities. Pretty much when you saw a pullback that coincided with the yields falling lower as well, you bought the dip incessantly. In those years from 2001 to 2021, 5% dips recovered to highs within 3 months on average and only became corrections 35% of the time. Corrections being a move greater than 10% peak to trough. And that's actually what we're seeing right now. We saw the S&P 500 pull back. We've seen yields pull back as well. The most likely scenario is that we go higher from here. There's a 35% chance that we do see a correction that could be 10% or more, but that leaves a 65% chance for us to actually just continue and break the highs we made in the S&P 500. Now, in this dip, what exactly have investors been buying? According to BOFA's data right here, investors have been buying single stocks in technology, financials, and the discretionary space. We've seen selling, according to BOFA, in industrials, utilities, and materials. They saw outflows, but ETFs told a different story. There were outflows in 7 of the 11 sectors, including financials, despite strong single stock buys there. Tech and energy ETFs bucked the trend with big inflows. And guys, this is what we're seeing right now. So regardless of the market momentum we're seeing in the S&P 500, investors are actually buying the dip under the hood. We're just seeing outsized moves because of volatility. And this is a place where you want to be buying the dip. A 5% pullback, buy the dip. If it goes to 10%, keep buying the dip. But we do know for a fact that we are definitely seeing buying occurring under the hood. And this is both as private clients. So it encompasses retail, institution, as well as foreign investors. Now, where we definitely are seeing huge dip buying opportunities and where we're seeing investors put money to work is in Europe. Europe had the largest inflows in over 2 years. And I do expect more of the same to come in Europe indices simply because analysts are raising European earnings estimates. We're seeing an uptick in earnings as of late. Price follows earnings, and that is why we're seeing this type of inflows, because earnings are set to do better. Also, European stocks come at a very deep discount to US stocks, and they actually look pretty cheap on a relative basis to history as well. And when you have cheap valuations as well as earnings growth, that is a recipe for upside surprises and for stocks to do very, very well. So don't discount European stocks or value stocks or blend type of stocks because they could do very, very well, especially as earnings expand. Not just towards mid caps and small caps in the broader market, but internationally as well. But let's actually talk about the macro, specifically the US. Now, guys, big news. This was yesterday. The House GOP has passed a budget bill which ends taxes on tips, overtime, and Social Security. What we can see here, though, guys, is that this has passed the House, and I believe now it has to pass the Senate. And I do think this should pass the Senate. However, guys, 213 people voted nay against this bill in the House, 212 of them being Democrats. 1 Republican voted against this bill. Now it just has to pass the Senate. And correct me if I'm wrong, if that's the case, or if this just goes straight through. Please leave that in the comments. I'm not too savvy when it comes to how bills turn into laws, etc. Now, guys, moving on, consumer confidence yesterday. We touched on this a little bit in yesterday's video, but we saw a downtick here. So consumers are feeling a little bit more pessimistic about the US economy. We missed expectations. It was part of the reason why we actually saw that decline yesterday, along with the fact that the perceived likelihood of a US recession over the next 12 months actually increased quite significantly from somewhat to very likely. And again, this weighs on overall sentiment, particularly in the here and now. However, what we do have to understand, guys, is that M2 money supply is actually increasing in a very big way. We've seen a huge move from the lows and do expect more of the same. And hopefully a greater supply of money can lead to greater money velocity. And if we pair lower government spending and deregulation, that's pretty much going to mean that this money right here is going to go to the private sector. Private sector spending goes up. That has a higher return on invested capital. This could actually be a big boon for US stocks, the US economy and US markets, not just right now, but for the next 3-4 years in tandem. So we'll see how this plans out. And the reason why we're seeing this huge uptick in M2 has to do with the fact that the Treasury have officially begun drawing down its TGA, the Treasury General Account, to fund the government's current spending. This essentially acts as a liquidity injection into the market. And that's why we're actually seeing M2 increase while the TGA is actually decreasing. So the TGA should hold us together up until about August, September, around about that time. That's probably when it will drain. And guys, every time the TGA was drained, like here in 2021, 2023, we saw stocks rally and rip to the upside. Do expect more of the same. So this is going to be very, very good for risk assets as a whole. Looking at earnings tomorrow, guys. So we officially had Nvidia and some of the bigger tech names report today. That is behind us. We keep looking ahead. Before the open tomorrow, we have Vistra Energy, Norwegian Cruise cruise lines, and that's about it. We have TD Bank, Opera, they're reporting, and then after the close, we have SoundHound, Dell, and that's about it. Transmedics as well, Duolingo. So not a big day as it was today or Tuesday, but still some market moving names in the AI space, stuff like Dell and Vistra, and a couple of other discretionary names, healthcare names too. And then data, it really kicks off tomorrow, guys. So the big thing here is going to be the GDP revisions, the second quarter estimate, as well as the durable goods orders month over month. And then we also get initial jobless claims, and then a ton of Fed speakers, Fed Barr, Fed Bowman, Fed Hammack, Fed Harker, Fed Goolsby, as well as pending home sales month over month, year over year. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.